Welcome to the 2025 first half results announcement conference call for Budweiser Brewing Company APAC Limited. Hosting the call today from Budweiser APAC is Mr. YJ Cheng, our Chief Executive Officer and Co-Chair of the Board, and Mr. Ignacio Lares, Chief Financial Officer. The results of the 6 months ended 30th June 2025 can be found in the press release published earlier today and available on the Hong Kong Stock Exchanges and Budweiser APAC's websites. Before proceeding, let me remind you that some of the information provided during this results call, including our answers to your questions on this call, may contain statements of future expectations and other forward-looking statements. These expectations are based on the management's current views and assumptions and involve known and unknown risks, uncertainties, and other factors beyond our control. It is possible that Budweiser APAC's actual results and the financial condition may differ, possibly materially, from the anticipated results and the financial condition indicated in these forward-looking statements. Budweiser APAC is under no obligation to, and expressly disclaims any such obligation to, update the forward-looking statements as a result of new information, future events, or otherwise. For a discussion of some of the risks and important factors that could affect Budweiser APAC's future results, see risk factors in the company's prospectus dated 18th September 2019, the 2024 annual report published, and in any other documents that Budweiser APAC has made public. I would also like to remind everyone that the financial figures discussed today are provided in US dollars unless stated otherwise. The percentage changes that will be discussed during today's call are both organic and normalized in nature and unless otherwise stated. Percentage changes refer to comparisons with the same period in 2024. Normalized figures refer to performance measures before exceptional items, which are either income or expenses that do not occur regularly as a part of Budweiser APAC's normal activities. As normalized figures are non-GAAP measures, the company disclosed the consolidated profit, EPS, EBIT, and EBITDA on a fully reported basis in the press release published earlier today. Further details of the 2025 first half results can also be found in the press release. It is now my pleasure to pass the time to YJ. Sir, you may begin.
Thank you, Ray. Good morning, everyone. Thank you for joining the call today. In the first half of 2025, we continue to invest behind our mega brands in a focused way with disciplined execution to navigate the current challenges and pursue long-term growth. Our business in China was impacted by ongoing weakness in our footprint and in on-premise channels. In South Korea, we continue to outperform across all channels despite a soft industry. And in India, we accelerated our growth momentum, with the Budweiser growing ahead of the industry. In the second quarter, our volume in China underperformed the industry as we experienced weakness in our key regions and channels. In spite of this softness, we delivered EBITDA margin expansion in China. In South Korea, while we continued to gain market share in both on-premise and in-home channels, our volume was impacted by shipment phasing. In India, we accelerated our growth momentum as we continue to lead premiumization in this market. I'll now hand it over to Iggy to provide more details on our performance in the first half and second quarter. Thank you.
Thank you, YJ, and good morning, everyone. In the first half of 2025, total volumes decreased by 6.1%. Revenue decreased by 5.6%, while revenue per hectoliter increased by 0.5%. Our normalized EBITDA decreased by 8%, while our normalized EBITDA margin contracted by 82 basis points. In the second quarter, total volumes and revenue decreased by 6.2% and 3.9%, respectively. Volumes were impacted by ongoing challenges in China, as well as shipment phasing in South Korea. revenue per hectoliter increased by 2.4%, driven by a positive brand mix across APAC and revenue management initiatives in APAC East. Our normalized EBITDA decreased by 4.5%, while our normalized EBITDA margin contracted by 21 basis points. Now let me cover some highlights for each market. In APAC West, in the first half, volumes and revenue decreased by 6.9% and 7.1% respectively, as revenue per hectoliter was flattish. Normalized EBITDA decreased by 8.8%. In China, volumes in the second quarter decreased by 7.4%, impacted by continued weakness in our footprint and channels. Revenue decreased by 6.4%, while revenue per hectoliter increased by 1.1%, as we benefited from positive brand mix. Normalized EBITDA decreased by 4%, impacted by our top-line performance and a decrease in other operating income, partially offset by cost management initiatives. Our EBITDA margin expanded by 86 basis points. We made further progress in our channel expansion strategy, focused on premiumizing the in-home channel as in-home consumption occasions continue to develop. In the first half of 2025, the contribution of the in-home channel to our volumes and revenue increased. The volume and revenue weights of our premium and super premium portfolio within the in-home channel exceeded the respective weights within the Chinese restaurant channel, driven by our mega brand efforts. On Budweiser, we launched the FIFA Club World Cup campaign during the peak summer period, with activations across all channels. The launch event, featuring legendary player Ronaldo, topped social media engagement rankings, including becoming the #1 hot topic locally on Douyin. Harbin embarked on its bold Next Gen of Harbin transformation program, focused on sports and hip-hop to transcend traditional marketing boundaries and appeal to Generation Z legal drinking age consumers. By blending holographic designs with its signature three-peak iceberg logo, Harbin's refreshed packaging also showcases the brand's boundless energy and consumer relevance. On the digitization front, the usage and reach of BEES, our B2B wholesaler and customer engagement platform, continued to expand. As of June 2025, BEES was present in more than 320 cities across China. We continue to leverage technology to further enhance our commercial capabilities, optimize our route to market, and strengthen our customer relationships. In India, we delivered double-digit revenue growth and significant EBITDA margin improvement. The Budweiser brand continues to grow ahead of the industry. Moving to APAC East, in the first half, volumes decreased by 0.5%, with revenue and revenue per hectoliter increasing by 0.6% and 1.1% respectively. Normalized EBITDA decreased by 4.5%, with EBITDA margin contracting by 157 basis points. In the second quarter, volumes in South Korea decreased by high single digits, mainly due to shipment phasing. Revenue decreased by high single digits due to lower volumes, while revenue per hectoliter increased by low single digits, driven by our ongoing revenue management initiatives. In the first half, volumes were flattish, as we continue to offset industry weakness by outperforming within the on-premise and in-home channels. From a portfolio perspective, we continue to increase consumer participation through innovation. In June, we launched Cass Lemon Squeeze 7.0, a new version of our popular Cass Lemon Squeeze product, and unveiled Cass Fresh Ice, a limited summer edition beverage that amplifies the signature crispness of Cass with an intense icy sensation. Likewise, we launched the Hanmac Extra Creamy Draft Can to further enhance drinking experiences through innovative packaging. Finally, we continue to maintain a sound balance sheet in line with our disciplined financial practices and capital allocation priorities. As of the 30th of June 2025, our net cash position was $2.4 billion. And with that, YJ and I are here to answer any questions that you may have.
Thank you. So, ladies and gentlemen, the floor is now open for questions. And please press *1 to ask a question. If you wish to cancel your request, press *2. In the interest of time, we ask participants to limit themselves to 2 questions and please ask 1 question at a time. Our first question is coming from Anne Ling from Jefferies. Please go ahead.
Thank you. Hi, management team. Thank you very much for taking my call. First is on China. So it's regarding the anti-extravagance impact. So we heard that the anti-extravagant act has a negative impact on the catering business, as we have seen, since end of June. And also, the government catering data, and also suggests some impact as well for June data. So would you comment on its impact on the industry sphere volume in third quarter to date? And is Bud APAC having more or less impact, on the back of this? So this is my first question. Thank you.
Thank you, and this is YJ. I will take these questions. First, we cannot speak for the industry. However, we did see a slowdown in the Chinese restaurant channel in quarter 2. We also see a great impact in the provinces where we have more coverage of restaurants. The observation we had of this channel slowdown has continued into the start of quarter 3. For the year to go, we're going to continue to focus on what we can control. First, we're going to continue investing more in our mega brand like Budweiser and Harbin, and also focus on expanding the in-home channel and enhancing our trade execution. We remain agile in both commercial investment and inventory management. Thanks for your question.
Thank you, YJ. And my second question is on South Korea custom and also the Taiwan anti-dumping update. So would you update us on the status on the two recent events? First, on the South Korea's custom tax dispute, which was first reported in February year 2024, and recently we have another update, in June, end of June, right? And then the second one is on the impact from the anti-dumping duties in China for the coming 4th month, starting from early July this year. So we understand that both are not big events, but definitely love to hear your comment on these two. Thank you.
I would like to hand over this question to Iggy. Iggy, go ahead.
No, thank you, YJ. Thanks for the question. And so I guess on the Korea customs tax update first, the dispute is ongoing. You are correct that during the year ended 31st of December of 2023, in South Korea, we recorded a $66 million non-underlying charge relating to a customs audit claim, and we reported that, of course, during our full year 23 earnings. So that claim is being contested. As of June 30th, 2025, we still continue to defend against the customs tax dispute, which, as we mentioned in the past, will need to play out through the corresponding legal system, and this can be a lengthy multi-year process. There are no additional news since the update we provided on the 30th of June. From a financial perspective, we did share that the potential penalty exposure was not expected to be material to the company at that time. And most importantly, as always, we intend to continue to vigorously defend the matter as we have until now, and we remain committed to upholding the highest standards of compliance across all of our operations. So that's on the Korea customs tax portion. When we speak about Taiwan, on Taiwan, frankly, it's a bit early to tell what the impact will be. We're closely following the situation. As you're aware, there's an interim ruling in place and continue monitoring for any final determination in the months to come. As you can imagine, we value the Taiwan market. Therefore, our priority is ensuring that our customers and our consumers continue to have full access without any disruption to the portfolio of beers that they're accustomed to having access to. We will continue to carefully consider any actions that we can take to mitigate any impact to our wholesalers and to our local consumers as well, but it's too early to have a full view on impact at this point, Anne. Thank you for your question.
Got it. Thank you so much. Thank you, Iggy.
Thank you. Our next question is coming from Lillian Lowe from Morgan Stanley. Your line is open. Please go ahead.
Thank you very much, YJ and Iggy. I also have two questions. Both are on China. I will ask the first one first. It's on China inventory destocking process. How is it going so far, and when we expect it will complete? And related to that, the destocking process, how we do look at this sales growth outlook in China for the second half. Thank you.
Yeah, so I can take that question, Lillian. Thank you for the question, and good morning. So first, maybe on the inventory side, if we take a step back and recap maybe the inventory management progress we've had since last year, I think it makes it easier to see how this is unfolding. Last year, so in 2024, in the second quarter, we had increased our inventory in preparation for the summer season, as we usually would. People expected a market recovery, and thus at the time our STWs, right, our sales to wholesalers, outpaced our sales to retailers as we built inventory for the summer. However, unfortunately, the industry was softer than people expected. We ended up with a higher inventory position than desired. And since the tail end of the summer last year, around September, October onwards, through to the first half of this year, so both first and second quarter, we've been proactively taking steps to adjust our inventory to the current business environment, and of course ensure that the health of our route to market is maintained. Our inventory level this year, so second quarter 25, is actually lower than in the same period of last year, both in terms of absolute inventory and also days of inventory. And we would actually expect it to be significantly lower than the industry average as well. As mentioned by YJ earlier, the on-premise has been disproportionately impacted at the end of the second quarter. And frankly speaking, we expect, at least based on July data, that this impact will continue into the second half of the year as well. So accordingly, we're going to continue to manage our inventory very attentively in the third quarter. And you would then, of course, expect a more normalized base as we reach the end of the year, given in the fourth quarter we will be lapping inventory reductions from last year. So I hope that answers your question, Lillian.
Thanks a lot, Iggy. That's very clear. My second question is about the channel. So it's YJ's opening remark, also your opening remark mentioned that in first half, premium and super premium mix in-home channel is already higher than its mix in the restaurant channel. So we did expand quite a lot in the in-home. So how's the progress or the penetration level of in-home for the whole business in the first half? And also, what's the plan for further expansion in the second half? Thank you.
Yes, I mean, I think with increasing disposable income and market maturity evolving in China, the premiumization trend of the in-home channel should offer and should continue to offer, right, a massive opportunity for us to further expand our business. If you think about it today, the off-trade or the in-home channel in China is roughly 60% of the industry, but it only accounts for a little bit more than half of our channel mix, right? So we have an opportunity to expand our presence both closer to the industry average. And we also know, as we've discussed in the past, that the in-home channel will continue to grow, right, its share of industry as the market continues to mature. So then there's maybe two angles in which we can look at our progress on in-home penetration thus far. I think there's the brand and portfolio perspective. There, if you look at retail overall, it's essential to have a full portfolio, right? You need more packs at each price point to fulfill different consumer needs, the nature of the channel. Obviously, the brand power of our portfolio is a priority, and it's very high, which offers us the potential for premiumization. And that's also contributing, as you mentioned, right, to premium and super premium weight in the channel going up. We have solid commercial plans here, and we'll continue to invest behind the mega brands and the strong mega platforms because both are proven, right, to drive value. But it's also going to be important for us to make progress on the right packs, right, to ensure we have magical price points covered, et cetera. And probably the biggest remaining opportunity on the portfolio side is to increase our share of Core Plus and Core Plus Plus, which are particularly relevant as a segment in the in-home. When I look at it from a route to market perspective, the key here for successful in-home expansion is developing a high quality distribution network. So it's as simple as that. You need to cover more POCs in the right way. We have been expanding our route to market, both wider and deeper, actually even in geographies where we're well established. That includes developing new Tier 1 and Tier 2 wholesalers, which of course helps us to expand to more points of sale. However, that's going to take time. there's both the recruitment and the capability building, right, that's required to ensure we have a picture of success, not just product in the store, but a picture of success in every in-home point of sale that we target. But yeah, the teams are quite encouraged actually with some of the progress. The contribution of the in-home channel to our total volume continues to go up, to our total revenue continues to go up as well. The premium, super premium mix in the channel continues to go up, and the fact that it's higher than Chinese restaurants is also encouraging. So I think we're at a place where I would say that there's a clear plan in place today. We see some progress on various portfolio and route to market areas, but there's still a lot of work to be done, and the focus will be on consistent execution on the strategy in the quarters to come. Thanks for the question.
Thanks a lot, Iggy.
Thank you. Our next question is coming from Yuan McLeish from Bernstein. Please go ahead.
Hi, good morning, YJ. Hi, Iggy. I've only got one question. I wanted to focus on Guangdong, please, because it's such an important province for you. The data that we're looking at shows kind of monthly improvements in-home consumption in Guangdong, but it seems that you've been losing quite a bit of share in that channel. At the same time, the data shows restaurant channel remaining weak, as you've referred to. I just wanted to understand what's working and what's not working for you in Guangdong. And how are you trying to turn around your momentum in the province? It would be really helpful if you could talk a bit about the nature of competition, what's happening on the ground, as well as your mainstream, your Core Plus Plus, and your Budweiser strategies there. Thanks. Thank you.
Oh, thank you for the question. A lot to chew there. Let me try and break this up into a few parts. I mean, as we're all well aware, Guangdong is the largest profit pool in China's beer industry, and so it's naturally, obviously, very competitive, always has been, and we expect it will continue to be the case, right? Everyone wants to participate and capture some of that premiumization opportunity. From a channel perspective, as we were mentioning earlier, yes, the restaurant channel remains weak. However, if you look at the depth of our distribution in the channel and the strength of our portfolio, it probably explains why maybe some of that data you have, which I don't have access to, could suggest that we're performing well. I mean, historically, we have over-indexed right in the on-trade channel in Guangdong, as you're well aware, and we built our brand power there. So naturally, we have a stronger base there. The focus for us is really on accelerating the expansion of our coverage in the in-home channel. We've been developing that high-quality distribution network I was mentioning a second ago to cover more POCs in what we call a qualified way. So that means right picture of success, right execution, so that it's sustainable, right? And that takes time. We're seeing some acceleration in both the rate of premiumization of the in-home channel, and this happens when we leverage the full brand portfolio, the full pack assortment with good execution. So we do see a difference when that takes place. We just need to accelerate the coverage, right, at that level of execution. To do that, we're investing with our wholesalers, so together with them, to increase the number and capability of our in-home sales force. So we have more specialized sales representatives, individuals that have the capabilities to execute, right, the picture of success in trade. And that will include shelf management, in-store displays, all the traditional things, right, that you see in the in-home channel. And then in the areas where the route to market is less developed, we're recruiting, as I was mentioning before, more tier 1 and tier 2 wholesalers with the right capabilities. And we need to do that, right, to get to more POCs at a faster rate. So that's a bit the name of the game in-home for us. I mean, at the end of the day, we remain committed to investing and growing the business in Guangdong. And we're doing that in a sustainable way for the long term, right? This plays a critical partner strategy long term. There's always decisions to fine-tune. However, I would say for the most part, the teams have clarity on the portfolio choices and channel priorities, which is essential. So it's mainly a matter of execution at this point, right? To your point on portfolio, Budweiser continues to be the number one priority. We're also allocating more resources to both Core Plus and Core Plus Plus in response to the current consumption environment. And also, that's probably the most competitive space, if you think about it, within the in-home. Based on our observations, we're seeing that this segment continues to outperform other subsegments, so we need to be strong there. And we're looking to accelerate our distribution so that we get to scale, right, in Core Plus Plus. And then beyond that, I mean, we'll continue to selectively invest behind super premium as well in the right places, particularly in the more developed cities and sub-channels within Guangdong, as we continue to see this as part of the portfolio, and it can play a key role there as well. So that's a bit of the kind of context on Guangdong today, Yuan. Thanks so much for the question.
Okay. So can I just clarify a little bit? So in terms of losing the share in the in-home channel, is that because you're in the wrong geographies and these geographies that you're not strong in are growing faster, or is this something that's happening within geographies in which you're already present?
No, the fastest growing channel in Guangdong by far is the in-home, right? And we're under-indexed, and expansion, right? Number of POCs and execution in the in-home is growing for all participants in the industry. So we need to accelerate within our existing geographies, Ewan, to more points of sale with a full portfolio. So that's essentially the priority for the teams there.
Great. Thanks for clarifying.
Most welcome. Thank you, Ewan.
Thank you. Our next question is coming from Chen Luo from BFFA. Please go ahead.
Hey, YJ and Iggy. This is Chen from Bank of America. So actually, my questions have been partly addressed by the previous speakers, but I still like to get additional color. So first of all, in China, we understand that the anti-extravagance campaign recently and our over-index exposure to the on-trade channel, as well as destocking, may have some impact on second half. So given all the pressure, is it fair to say that our volume in China in Q3 will still face some challenges, and we can only achieve positive volume growth from Q4 this year due to extremely easy comps? So this is my first question. Thank you.
Thank you so much for the question. No, it's a fair view. Maybe how I would characterize is in the first half, given this consumption environment was still soft, particularly in the on-trade channel, and overall consumer confidence remains low. That's why you see the softness, right, in our footprint and channels. And at the end of the day, given we continue to have a geographic footprint and channel weight market share headwind, we need to find continuous improvement in our like-for-like performance to offset it. If you layer on top of that, of course, the recent softness, right, of the Chinese restaurants and on-premise from a policy perspective and the inventory management that I discussed earlier, you should still expect some volume headwinds, right, through the third quarter as well. The fourth quarter will have easier comps. So both the ongoing on-premise channel softness will at least be partially offset by the more normal base. And that makes sense, right? Because if you think about it, we started the inventory management with scale during the same period last year. So we'll be lapping, as you mentioned, a softer or an easier base. And then within that context, going back to YJ's comments at the start of the call, right, what we've asked the teams to do is to continue to focus on the factors within their control. So enhancing execution of the mega brands, expanding, right, the distribution and coverage in the in-home channel, and accelerating the speed of premiumization within the in-home channel. The faster and the better we execute those three elements in the months to come, the sooner you will see an improvement in trend, as it'll help us to offset the geographic and channel mix headwinds as well. So I hope that answers your question.
Sure. Thank you, Iggy. The second question is about the core plus segment in China. It appears that this segment is actually performing weaker than our premium segment, such as the Budweiser brand. And within the core plus segment, Harbin has been a key brand, and I understand that we are also focusing on the mega brand this year. So based on the channel checks, we think that our core plus segment is facing big competition pressure from local brands, such as Yanjing on a nationwide basis, and also from Zhujiang and Liquan in Guangdong specifically. Is there any measure for us to improve our core plus segment so that we can actually counter the macro pressure and start to see improving momentum going forward? Thank you.
Thank you for the question. So look, at the end of the day, Core Plus and Core Plus Plus, is indeed an important segment for us, right? Particularly in the in-home, as I was mentioning before, and we have a large distribution opportunity to fill. Today, this is a priority we're looking to capture. And in the in-home channel, to do this, you need the brand fundamentals, right, for success to be working in the right way. The first one is brand power. So consumers obviously play a larger role in choosing what they consume in the in-home channel. And so brand power becomes more relevant, right? We've built brand power, or the brand power of the total portfolio, that have significant potential to drive both share and premiumization. However, to your point, we're further ahead on that, Lu Chen, on Budweiser, right? We had very strong campaigns at the start of the year, big investment focus, big priority, as we mentioned, number one priority, and we need to do the same on Harbin Ice's variants, including Harbin Ice CGD Zero Sugar, which is still on a relative basis in its development phase, right? So I think the recipe there is very clear, and it's doing more of that. Product superiority, similarly, right? We use the core superiority framework we've discussed in the past to make sure we have the best liquid, the best package, the best communications for our brands to ensure we have a winning proposition. And here we just further enhanced actually the visual brand identity and the liquid of Harbin. And that's freshly in the market, right, since May. So you will have to wait for a few months probably to see the impact, but we're quite pleased with how this tested. We're quite pleased with how this has gone to market. And this should help to increase the relevance of the brand, particularly among younger adult consumers. Then on the assortment side, right, you also need a broader brand and pack assortment that would generally be available in the on-premise channels. So our opportunity here will be to also expand the distribution of this broader assortment for both Core Plus and Core Plus Plus to fulfill different consumer needs. And the teams are working on that as we speak. And then innovations can play an interesting role as well. To your point, there's very local specific competition, particularly as you move down into the Core Plus segment. So we have some local brand innovation opportunities, nothing to discuss today, but as you can imagine, a solid innovation pipeline also supports, right, the different regions in a tailored way for local consumer needs. So it can be quite complementary to our strategy. And then all of this will need to be supported by our expanding of the in-home coverage and distribution. So yeah, lots of work to do, but we're committed to the brands and we're excited about their growth potential based on some of the green shoots we're seeing with some of the initiatives in market. So that's a bit the summary, I think, on the Core Plus. So I hope that answers your question.
Yeah, that's very helpful. So it seems that we have a very good action plan and playbook. I understand there's a lot to do, and we may still be in the early stage of the journey, but we definitely look forward to more achievements and milestones to be made in the future. Thank you.
Thank you very much.
Thank you. Our next question is coming from Christine Peng from UBS. Please go ahead.
Thank you. I have two questions. One is for Korea and another one is for Indian market. So I read those questions one by one. So the first question is about the Korean margin outlook. So given the sluggish industry volume trends in South Korean market, what will be the margin outlook in future?
So I'll take that one. Thanks for the question, Christine. I mean, in the first half, our volumes were flattish, and kind of the narrative would be that we've continued to outperform from a commercial perspective to offset that industry weakness you were mentioning. I mean, the main drivers of margin growth in APAC East continue to be first and foremost price, then operational efficiencies, and then mix. And on pricing, I mean, we recently announced, of course, a 2.9% price increase for our core brands from April as of this year. That obviously didn't kick in until the second quarter, and that explains why you see a stronger, net revenue per hectoliter performance and obviously the margin contribution of that in the second quarter versus the first quarter. In terms of operational efficiencies, we continue to implement the cost management initiatives that we have across our business. We see this as a core capability, so we wouldn't expect any change in the ways that teams execute that. And then, lastly, on the mix side, I mean, we anticipate the industry will continue to premiumize. It's still significantly under-indexed versus other mature markets. Of course, we're very well positioned to capture an outsized portion of that growth with our comprehensive portfolio of premium brands. And over time, with the differentiation in pricing that we've been creating, right, by taking more price on the high-end portfolio than we do on mainstream, we see an opportunity, of course, for that to drive as well a long-term mixed benefit. Then on top of that, probably what's new, which is also beneficial, is we continue to focus on increasing consumer participation. So these introductions of non-alcoholic beers and some of these other innovations help to bring more consumers into the beer category overall, and that should also serve as a tailwind in the future, particularly as consumer confidence improves in Korea. So on this basis, longer term, we don't see any barriers for future margin recovery. In fact, if I go back to the views that we shared during our Investor Day in Korea back in late 2022, where you recall we saw this underlying structural margin tailwind, right, from these growth drivers. Our view still holds today, and we continue to see growing market share and top line as the critical drivers, right, to expand our EBITDA margin, even in a soft industry. So we're confident with the strategy. We're confident with commercial capabilities, which position us for future sustainable growth, and we just need to continue down that path. So thank you very much for the question, Christine.
Thank you, Iggy. So my second question is about India market. So can management share with us the latest trends for India market in terms of volume growth, mix, and profitability?
Yeah, maybe let me give a bit of color on India. So, I mean, in India, we are focused on consistent and sustainable top-line growth. That's the priority, right? And that needs to then translate into EBITDA and cash flow growth for us as well. Our India business has strong growth momentum. The premium and super premium portfolio there, which is roughly two-thirds of our total business, grew by double digits both in the quarter and in the first half of the year. And the Budweiser brand continues to grow ahead of the industry. So that's really important, right? That's kind of what underpins the growth in India. Premiumization continues to be a very important driver for the business and for EBITDA performance. We've delivered strong results with double-digit revenue growth and significant EBITDA margin improvement in the quarter. Yes, we had a softer base in the second quarter, to be fair. However, we see the benefit of this strong premium growth translating into our quarterly results and moving the needle. In terms of industry overall, I mean, it continues to grow, which is also helpful. The per capita consumption is still very low in India, as you're well aware, and the industry is expected to continue growing both in volume and revenue terms. And that's even before we consider the impact of any moderation initiatives, right, which can unlock an even more exciting future for the India market. On moderation specifically, we're seeing several states recognizing beer as a drink of moderation, reflecting that in their policies. And that can mean either more access to beer or taxes being either raised less than for other higher alcohol categories or not raised at all. We've got a few examples actually in the last few months. Uttar Pradesh, for example, roughly doubled its number of outlets. So now there's about 13,000 outlets that can sell beer there, which is quite a significant increase when you think about all of India has maybe 80 to 90,000 licenses today. Low alcohol bar retail vans, which are allowed to serve both beer and wine, are now allowed and introduced in a few key cities like Lucknow. And then in Madhya Pradesh, we've actually also seen some positive changes for both excise as well as beer distribution. So we're seeing progress on the moderation agenda as well. And then the last one, which is fully under our control, is on productivity, right? And this will be an important driver, as we mentioned in the past, for EBITDA margin. Our supply chain teams are making continued progress. They're benchmarking our breweries there against the best-in-class small breweries that we have in China. And we see very good progress on the initiatives that they're putting in place, and that'll play a very critical role in making sure that top-line growth translates to bottom line and cash as well. So we had a stronger quarter in the second quarter in India, and we're pleased with the progress. The teams have a lot of work to continue down that path as well. Thank you so much for the question, Christine.
Thank you, Iggy, for answering my questions.
You're very welcome.
Thank you. Our next question is coming from Linda Huang from Macquarie. Please go ahead.
Thank you very much, management. So I have two questions. The first one is regarding for financial, because I noticed that there's the $53 million US dollar. This is the non-underlying income tax. So can you help us to understand what this the underlying income tax is about, and will there be any further impact on the company's financials? So that's my first question.
Well, thank you for the question, Linda, and good afternoon. So when we think about long-term value creation at Bud APAC, optimizing our capital structure is always an area of focus. Specifically in the second quarter, we performed an internal restructuring. And so that's what drove the $53 million in capital gains and withholding taxes on distributed earnings. The financial impacts were undertaken in the second quarter. That's why we reflected them accordingly. They're in non-underlying income tax since essentially they're outside of regular operational activities, right? So the impact is contained or condensed within the second quarter. And then the thought process behind this is the benefit from this transaction is the opportunity for us to have more efficient deployment of cash, which can include, among other things, interest income arbitrage. So we did a bit of an internal restructuring here. That's what drove that transaction. So I hope that answers your question, Linda.
And then the second question may be related to the deployment of the cash more efficiently, because I think especially for your previous announcement, right? Investor, they highly appreciate the company's their generosity to pay the 5.660 cents. This is US dollar DPS. And even the earnings decline in 2024. So I remember in the announcement, management also mentioned that to sustain or grow the dividend payout amount. So can we say that this 5.66 dividend per share can be well expected, given that 2025 the earnings looks likely to be challenging?
Thanks for the tough question, Linda. You're painting me into a corner here, but maybe let me take this stab at it. Look, we continue to focus on maximizing value for our shareholders, and this, of course, includes providing a competitive dividend as well. At the time of the IPO, when we shared our dividend policy, it was to maintain at least 25% as a dividend payout, and of course, since the IPO, our dividend payout ratio has always been higher than that commitment. We've been increasing, obviously, the dividend amount in absolute dollars steadily year over year since the IPO. And you're right that the most recent payout was $750 million, or 5.66 US cents per share. We still continue to aspire to maintain or grow our absolute total dividend amount. So the logic holds, right? We plan to do that over time, while maintaining, of course, a solid balance sheet for future growth. So that's a bit the intent still, despite the current, call it business pressure. And we're still very confident of our future cash flow generation capabilities, right, for the business, as well as the ability to fund the different capital allocation priorities we have. So still organic growth, complemented by strategic and organic opportunities, and of course, still returning cash to shareholders where possible as appropriate as well. So I think that still holds, Linda, and hopefully that answers your question.
Okay, I got it. Very clear. Thank you very much.
You're most welcome. Thank you.
Thank you. In the interest of time, our final questions will come from Leaf Liu from Goldman Sachs. Please go ahead.
Thanks a lot, YJ and Iggy. Thanks for taking my questions. I got two questions. The first is on Korea. So would you please share color on the market share strategy following the pricing hike? And also, have the Korean consumer receiving the pricing hike so far, and also the response from our competitors? How to look at the marketing investment level in Korea going forward? Thank you so much.
I would like to have Iggy to this question. If you have a second one, I will take.
Sounds good. No, thank you, YJ. Thanks for the question, Leaf. So look, on pricing, I mean, we always make decisions in a greater context, right? We look at the macroeconomic environment, the strength of the portfolio, the competitive landscape. This is a constant process, right? The teams have undertaken with a disciplined approach for a long time, and you can count on us to continue to do that. The most recent announcement was a 2.9% price increase for our core brands as of April this year. Regarding the price pass-through, I mean, please recall that an increase in a factory price doesn't necessarily lead to an increase in on-trade market prices, right? At the end of the day, the final retail price is determined rather by the voluntary judgment of each business. And so far, if we look at the market there, this is in line with our expectations. But most importantly, I think the business needs to be in a good place, right, to be able to make these decisions in the first place, right? And the brand power of our core portfolio is the strongest it has ever been. It's been complemented by a very strong innovation pipeline as well, with Cass 0.0, Cass Lemon Squeeze, of which we have multiple variants now in the market as well, and most recently the Hanmac Extra Creamy Draft Can. So, I mean, in June, we launched Cass Lemon Squeeze 7.0, which is another version of the popular Cass Lemon Squeeze family of products. And this was timed, right, to capitalize on the demand for premium and higher proof beverages during the summer, right? So we're quite pleased with that. Then we recently also unveiled Cass Fresh Ice. So this is a limited edition summer variant that amplifies the kind of signature easy drinking crispness of Cass by giving you an icy sensation. So I encourage you to try it the next time you're in Korea, but we're also pleased with the halo effect that we'll have on the Cass mother brand. And then probably the third big innovation was we also looked at innovative ways to have packaging enhance the drinking experience. And so the Hanmac Extra Creamy Draft Can does exactly that. It's designed to generate the kind of bubble formation that you have in a poured draft beer. So from the moment you open it, you get this rich, creamy head that delivers that texture, smoothness, and taste you expect from draft beer. So effectively what we continue to do is invest in innovations with strong marketing plans in Korea. We're very pleased with commercial momentum that the team has there, and they need to continue doing that as they have thus far. And that's really what underpins our ability to execute revenue management initiatives within the market. So we're in a good place, and things are progressing as they're expected from a commercial perspective, Leaf.
Thanks, Iggy. Indeed, the new products were pretty impressive while I had the privilege to taste them. Thank you so much. And my second question, thank you. The second question is on the China's in-home channel development, actually for the partnership with Square. So any progress that you can share with us in terms of the in-home distribution and any plan for the other white space regions under the umbrella of partnership with Square? Thank you.
Yeah, as I said, I'm going to take this question. If, first I will see, we carefully assess any opportunities route to market partnership to extend our distribution. And regarding the cooperation or partnership with Swire, we pick Anhui and Hubei, two provinces as a trial in the past half year and 1 year. According to the latest Nielsen data, in the second quarter 2025, we continue to grow the market share in this in the in-home channel in these two provinces what we trial. And also, I just want to share, I just met the Swire APAC management last week in Hong Kong. I see the excitement with our portfolio and also their commitment to grow the business with us. So this a partnership with Swire between us has a potential to drive the top line and translate into a meaningful financial benefit for both. And at this moment, I have nothing to announce regarding further expansion, but we will continue to monitor the program we work together, and we will explore further expansion opportunity, if any, later. Thank you.
Sure. Thanks a lot, YG. Thank you.
Thank you.
This concludes our Q&A session today. I would like to turn the conference back over to YJ for the closing remarks.
Thank you, Ray. As the second half of the year evolves, we continue to invest behind our mega brands in a focused way. With disciplined execution, we overcome challenges and pursue long-term growth. Thank you all for joining us today, and I look forward to speaking to you again soon.
This concludes today's results call. Please disconnect your lines. Thank you.